in 40 years, the Federal Reserve is expected to raise interest rates several times in 2022. This is Fed Chairman Jerome Powell on what will be needed to ensure a long economic expansion.
That's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal.
The way the central bank does this is by changing the federal funds rate, its main tool for managing the economy. The rate was lowered to nearly 0% in 2020 to boost the economy at the beginning of the pandemic.
There is an important job for us to move away from these very highly stimulative monetary policy settings.
Adjustments to the federal funds rate influence a range of borrowing costs, from how much you owe on your credit card to mortgage rates. They also shape broader decisions made by companies, like how many people to hire or whether to raise prices. Here's how the federal funds rate works, and how just one rate can guide the entire economy.
The Fed meets every 6 or so weeks, and they're looking at a range of economic data at those meetings. But they have two main goals. One is to ensure stable prices and low inflation, and the other is to make sure that the labor market is strong.
Nick Timmeros covers how the Fed guides the economy through crises. He says you can think of the economy as a car and the Fed as the driver.
They want to make sure that the economy is not growing too slow, and when it is, they'll push on the gas, but they also want to make sure that it's not going too fast, and so they'll slow the economy down by pressing on the brake.
This is where the federal funds rate comes in.
When you hear on the news about the Fed raising interest rates or cutting interest rates, what they're actually deciding to do is to raise or to lower the federal funds rate.
This is the interest rate that banks charge each other to borrow money overnight. But there's a catch. The federal funds rate isn't directly set by the Federal Reserve. So in order to influence it, the Fed uses a couple of other tools to set a target range. These tools are rates that the Fed controls in its role as a bank for banks. Here's the target range that was in place during 2021. The Federal Reserve sets an upper limit and a lower limit, with the goal of keeping the effective federal funds rate somewhere in between. The upper limit is determined by interest on reserve balances. This is the rate of interest a bank gets on deposits, known as reserves, that it keeps at the Federal Reserve. The lower limit is determined by overnight reverse repurchases. These are securities, like Treasury bills, that the Federal Reserve lends to banks, usually for a day, while paying interest. On this chart, you can see where the Fed has set the target range between the two yellow lines. The blue line, which is the effective federal funds rate set by banks, sits between the upper and lower limits. As the target range changes, the effective rate goes up or down.
Whoa. Empire Crypto TV, man. That's powerful information. I don't think like a lot of people would understand some of the matrices being explained here. My name is Stone. This is Empire Crypto TV. Welcome to the show. Thank you for joining me tonight. The interest rate issue is most partly the main issue that is causing the market to deepening so low. The interest rates have risen so much that it has curbed. It was to curb inflation. And of course, the cost of borrowing money and will be rising and from one bank to another. So the interest rates does affect the crypto market as we see it right now, since it has been risen and it will be continuing to rise. But as it rises, Dow Jones, such and other assets have been rising on the platform. But let us look at the market, at the crypto market, which tells me a different story from what we are explaining right now. Okay, I just want to look at the crypto market. Let's see what happens and what we have with the cryptocurrency right now. What is the price of Bitcoin? Looking at the price of Bitcoin, you can see for yourself that it is at an all-time low. It even reached at $35,000 per coin, which is extremely low. But this has to do, of course, with this temporary interest rate issue that is happening within the Federal Reserve Bank. As we heard, Mr. Jerome Powell, which is the Federal Reserve Chairman of the Bank of the United States, the central banks, to say, Looking at the Bitcoin, $36,000 per coin, quite low. And going into the weekend, I don't know how things are going to be looking like. Let's just also look into the coin market cap as well. How the overall 24 hours has been affected. Let's look at that. It's all red blood on the street. It's not healthy. It's not good. It's not looking good at all. Just looking at the coin market cap of the past 24 hours, as you can see, it's at 1.6 trillion, even lower than 1.8 trillion that we are used to. Okay. My support usually is at 2 trillion, and it has broken that support severely. 1.6 trillion is way, way, way low for an interest rates for sorry, for the market cap of cryptocurrencies. Now BTC, right there, look at that percentage, 41.5%. It's nearly to get to those 30 something percent, and if it goes below 40 something percent, then that's not a good sign at all. Ethereum, on the other hand, it usually goes to 18%, but now it has risen to 19.7% at this very difficult time. So those smart contracts that you hear about on the blockchain technology and NFTs that are running on Ethereum are certainly doing something to maintain the Ethereum project. But it's blood on the streets, man. Blood on the streets, no gains, no gains that we can ascribe to, but only the USD that is gaining. But even the top 10, okay, itself is blood on the street. Only just the stable coins that are looking to be good, doing well. That's because the dollar is pegged against cryptocurrencies and other assets as well around. And of course, let us look at the story that specifically says what is really happening, that supports the idea that we are at a situation whereby we have to accept the Federal Reserve Bank's interest rates decision. Okay, the story is quite interesting. Bitcoin, other cryptocurrencies, and crypto stocks seem to be moving in line with broader markets today. Like you have stocks, they are moving or in a hurdle with cryptocurrencies as of late. That's something that is interesting as well. What happened? Cryptocurrencies and crypto stocks sold off as investors digested. That's selling off. That's why we are seeing this bearish trend as investors digested the recent policy moves by the Federal Reserve yesterday that are under intense scrutiny from the market right now. Intense scrutiny, that is a language that is being used here. If you going to follow the fundamental aspect of it, that intense scrutiny really means that there is an intense sell-off that has been also been influenced by major investors as well. So everybody's just sort of like following this trend of this sell-off that we are seeing right now. Over the last 24 hours, the price of Bitcoin, BTC, minus 2.94%. The world's largest cryptocurrency had fallen nearly 8% as of 2:14 p.m. at ET today. Meanwhile, shares of the Bitcoin miner Riot blockchain, Riot, minus 4.22%, traded more than 12% down on the day. And shares of the large cryptocurrency exchange Coinbase Global, minus 6.76%, had fallen roughly 11.5%. So this interest rate issue, it does really play a major role into this bearish market. So what cryptocurrencies and crypto stocks are trading with a volatility after Federal Reserve yesterday raised its benchmark overnight lending rate, the federal fund rate, by a half point, the largest rate hike by the Fed in 2 decades. Of course, 2 decades ago, there was no cryptocurrencies in the market as we see it right now. So it's a new thing that is happening within the crypto markets, as it experiences the highest interest rates ever in 2 decades. I think it is entering a new phase as well. And as it enters this new phase, there is always that shift and uncertainty and a lot of asking questions, what can it do? But there have been markets way before 2 decades, like your Dow Jones. They know how the market would run if this kind of thing happened, if interest rates are risen at that point. But for cryptocurrency, it's a new thing. Hence, it is taking very slow to adjust because it's a new asset that has been invested on. Hence, that's why we see this huge bearish trend that we are seeing right now. That's also just one of the fundamental reasons, if I could say personally. The Fed is trying to tame inflation, which has been extremely high for several months now. Though they are trying to tame inflation in terms of their local currencies, but it does. And one of the most important sectors as well is also by part the cryptocurrency market. The agency also laid out details for its previous closed plans to reduce its nearly 9 trillion balance sheet. Okay, I won't go into that, those 9 trillion balance sheet and so forth. Okay. Okay, there was another story. Okay, in other news, Coinbase recently opened its platform for non-fungible tokens, Coinbase, okay, to public after by releasing it to small group of people in April. That's just an additional news that really does not support this interest rate topic that we are currently on, but just to add on to the news. But okay, let's carry on. Okay, let us look at the news, other news market, what they are saying, how they are affected by this interest rates cycle that is happening currently. Okay, let us just looking at the major news. Wall Street falls as rate hike fears overshadow strong jobs data. Okay, rate hikes, of course, they will overshadow. All right, let's just go down. Okay, as you can see, even on other markets, not only just on the crypto markets, you can see just right there. It's red. You can see right there. It's blood on the streets, man. Blood on the streets. It's all because all of these markets are affected by Jerome Powell's speech about the interest rates hike that will continue in 2022 going forward. Okay. All right, US stocks indexes fell for a second straight day on Friday with elevated treasury yields dragging down growth shares. Okay, so that is the reality right there. Even on the other markets, I was also looking at the Apple stock markets on the charts as well, trying to relate the whole situation because the traditional markets are studied because now they are moving alongside with cryptocurrencies, which is now, if I should say, a new traditional market. It's no longer something that is foreign. Now it is something that is common to investors. So it does get affected as much as these traditional markets are. Look at that 1 hour chart. Okay, you can see on the 1 hour chart, you can see that bearish gap that is caused on the Apple stock. Necessary gaps means that there was a little trading taking place, and by the time they returned, a strong sell-off came in through, and that strong sell-off, you can see that it caused for the market to go extremely down. That's the Apple stock, by the way. And let us look at the commodity side as well. Okay, looking at the gold, let's see how they are doing, because most of the time when I see gold, on a 1 hour chart, but not bad because it's also low. Usually, when cryptocurrencies and other stocks are not doing so well, commodities seem to be thriving. But looking at the gold right now, it's not as well as thriving as it should be. Usually, it's up by 8 to 10%, 8 point something percent up, but now nearing the 2,000. $2,000 per ounce with gold, but it's just staggering right there at 1,883 per ounce. So there's not much gains that we would expect from the commodity sectors at this point in time when we are seeing this kind of bearishness within the cryptocurrency space and the stock market space. This is a analysis for Empire Crypto TV. This is also a chart. Okay, no. Before I carry on, I just wanted to make a list. So I have my support right here. Okay, I just want to lay down the support level right there. Okay, since the market has gone so far below, so I'm gonna just put my support maybe at okay, I'm gonna just put my support at 33, but that's too low. At 33,000 per coin. Right now, the coin is $36,000 per coin, but I doubt that it's gonna go lower than 33,000 per coin. Let us see what happens on this weekend. This is the one-day chart for BTC. Let's see what's gonna happen on the weekend, and maybe we're gonna see some changes of some sort, where we see the market trying to thrive. So let us see what is presented to us via the news, also fundamentally, and also what's going to happen as well with the stocks going forward, because traditional markets are closed over the weekend, and cryptocurrencies will be going on over the weekend, and that is something that is going to be a core difference between the two markets, the traditional markets for the stocks and the crypto markets. So that remains to be seen. We'll see what's going to happen on Monday. This is Empire Crypto TV. Thank you for joining me tonight. Until next time, keep on watching the market, and I will also be doing some shows over the weekend. Please watch out for that. Empire Crypto TV. Until next time, bye bye.